start of Bitcoin. So because of this chart, I was able to project the FIPS and catch the top over here. So that was when I tweeted that we are currently in, or most likely at the top. Since then, it has been very difficult to see what we are here, but let's just explain what I have here. So we started with a 1, 2, 3, 4, and then an extended fifth wave. So by now, I think most of you already know how to project or how to count it correctly. But what you should be looking for on the Elliott waves, if you have 1, 2, 3, 4, and a 5, then you should look for alternation between the second wave and the fourth wave. So basically, if the second wave is sharp down, then the fourth wave will be sideways, and the other way around. So sometimes you will have something like this, sideways 2, and then a 3, and then a 4 will be sharp. And what you see quite a lot is something like here that you have in your wave 2. And definitely for Bitcoin, you have A, and then B here, and then C right there. So very, very tight second wave. And that's very common for Bitcoin and in cryptocurrency. So you have 1 and 2 never comes around that 618, but actually way lower. If you look here, you have that 1, 2, and if you take the FIPS, it would basically be at the .25 FIP. I mostly use the trend pullback, and then you can see .28, .25 it projects. So what I've did right here is we had that 1, 2, 3, 4, and then 5. And here we have a 1, 2, and then a 3, 4 triangle for a fourth wave, which is basically very common. And then I took the FIPS from the first one to the second one. I tried to use like the magnet tool, like that. And here, currently on a linear scale, the third one was very extended. I think it was even beyond that fifth 618, even much higher. So on a log scale, we are currently for that third wave around the 0.786. So the rules actually say that the third wave should be at least 1-to-1. But you're on a log scale and a linear scale. On a linear scale, it's definitely like the third one that's the longest. So mostly I don't really use the FIPS on a log scale because that's not the best projection. And definitely for Bitcoin, it is quite difficult to use the FIPS on a higher time frame because it's not really that great unless we are still in another type of wave, that this is 1, 2, and that we are still heading for a 3 here, 1, 2, 3, 4, 5. But that doesn't really matter here. So I have that first one, second one, third one, fourth one, and then the fifth one taken from the top here towards the bottom. And then we had around the 2,618 that we reached. So it's not that exact on Bitcoin high time frame. So we have now 1, 2, 3, 4, 5. So now I'm actually looking for that second wave to then make a third wave, then a fourth wave, and then a fifth wave a bit higher. So zooming in, most of the people on Twitter actually counted this as 1, 2, this as 3, this as 4, and now 5, which is it could be possible. This is 1, 2, and 3, 4, 5. Definitely possible, but I rather count it as A, B, then C. And then here we have a 1, 2, 3, 4, 5. And the reason that this is sideways, so A, B, C sideways, this one is sharp down. And then we have 1, 2, 3, 4, 5. So that's actually my fifth one over here. But now I will use a different chart because this one was my main chart to look for from the start from this from Bitcoin actually to count it like this. But I use the BTC USD nowadays to look for like the important levels. So mainly what I do is I look on a yearly time frame. I start on a 12-monthly time frame, and we have our yearly open, yearly EQ. So that's the middle point. So I take the fips like this, and then EQ, and then you have the midpoint of our year. That's basically a huge support number already. So I will definitely look at 20,000, 30, 60 for a long, because that's also a monthly equilibrium. Next, I have my yearly levels. So that's yearly resistance, 2 candle closes. So actually in a close and an open at the same time. That's not tapped already. So it's an untapped yearly level. And then I have my previous year. So this is my main resistance. It's 31,000, something like that. Then I go on a monthly time frame. And I usually start with my monthly levels. So same thing. Here we had a monthly level. It's a monthly tap level. So just imagine that we were actually, to replay this, we were currently over here. And you see that this was a monthly level that was untapped. So this is huge resistance. So you have monthly levels, weekly levels, daily levels. And your monthly levels are like the biggest and most important levels where price action can turn. So what happened? Price comes into the monthly time frame, monthly level, and we started to reject. We had a previous monthly level here, but we blasted through that previous monthly level. So this can act as support in the future. And if you look at like on a lower time frame, on a daily level, for example, we blasted through that level. We came back, and it acted as support to then come towards that next monthly level. So basically, you can use those levels as support and resistance. Back towards the monthly level. Yeah, monthly support, of course, over here. Then my monthly levels, monthly high, monthly low currently is actually lower, but I think it will be a little bit lower too. And then to find your monthly EQ, you do the same thing. You can make like an template, EQ, and that's the .5 FIP if you go .5 FIP. Monthly open, so that I have on the monthly time frame. Then I go to the previous month EQ. And if I then add my my year, sorry, you can see that we have huge support here. So it's a previous monthly EQ, and it's a yearly equilibrium too. All right. So next up, I go on a weekly time frame and do the same thing. Weekly levels. So quite a lot of them. 29K, which is basically also close towards previous year EQ here. Then a bit lower, we have a weekly level here, which is untapped actually. If you look closer, we never came towards that level. We never tested that level. We have a new weekly level here, which will act as resistance. A previous weekly, and a previous weekly over here. Previous weekly, a weekly untapped, and a weekly that was tapped. So basically, these levels will also act as support and resistance. So currently we are around like the first previous weekly level. A little bit lower, we have that 2900 previous weekly, and that might align with some more levels that I have. So I will open up some more levels soon. Previous week, same thing, weekly high, weekly low, previous week equilibrium, and then the previous week open. Then on a daily level, I do the same thing. I look for daily levels. Sorry, daily levels. We have one over here. We have one that's actually a little bit tapped. Then we have a daily level here. I call this a tap daily level because we tapped it the next day. So we have like an open and a close at the same level. The next day we come towards it, we tap it, and then we go down. So it's already tapped, so it's less effective, but still I want it on my chart as well. Here we have daily support. And then today, for example, if you zoom in, we had a daily level today. So this day opened, let me see. I want to see the weekly open here. Yeah, so today we opened right here. So at this price level, we opened. What happened? We dropped a little, came back into this daily level, and then you saw this wick. We instantly fall down. We come back towards it, test it again. You have like a failed auction from this high, and then we moved lower. So on a daily time frame, what happened actually? You can see we had this daily level. It fell down, tested it, and now we are currently at the weekly low, which is right here currently. So you can see how these levels work. So even if I go on a replay mode, let's see. Yeah, so let's say that today wasn't, so that today started like this. Like we have a new candle here, and this is a free daily level. So you have a close and an open at the same time, but it actually never tapped into it. So then today happened. We tap it and we go down. So those levels act as support and resistance. And then today we are basically a little bit lower now. Daily low. And then we have the daily equilibrium here, which will also act as a resistance. So next to my daily levels, I have my range. And this is something quite interesting, actually. The way that I place my range. Let's see. Yeah, I started on the 12 monthly time frame, but I cannot go back. Yeah, not sure why. So the way that I've placed this one, I have my yearly levels. This is the top, and this was actually the bottom. So let me just show you. You can actually use this as your yearly levels. Like that. This is like the mid range. Then I take another range. There you go. So basically we are at mid range from this range, mid range. So if you zoom in on a daily time frame, for example, you can see what happened here. We tapped that level and we went to the downside. So you can do the same thing for searching your bottom. You take the channel like this and place it here. This is actually a new range currently that we are in, and that would be the mid-range. Over here. And then for resistance, of course, to the upside, you can use the same thing and you have another mid-range here. But you need to look for some confluence. So currently I have 2 mid-ranges, and I'm looking at this one as support. So I just place those in my range, call this folder. There you go. And now something very interesting over here. We took this range. If you take the range from here, I look on a 4-hourly time frame. This would be my bottom of the range, and this would be the top of the range. So the reason why, every time it comes toward that level, you see those wicks, but it was never able to close below. So it was never able to have a candle close below this level. So that's my bottom range. And here, this is my top range. It was never able to close higher than this level. Then what I do, I copied it the first time, the second time, and this is basically, that was the bottom range, this mid range, from this range over here, basically by copying this one. And if you even copy it another time, you see the top of the range. If you do it another time, then you basically had the top over here. And then a little SFP from your higher mid-range. So I do use those levels right now to see where we are. So if I now move this one, for example, all the way to the right, and let's just see how it interacts with that level, then you can clearly see top of the range, bottom of the range here. Now we are currently looking at this level a bit lower as my next target. So try to use those levels, because it's very interesting how it works. So now I have this range over here. I can delete those. So that's how I actually create my ranges, starting from the yearly time frame. Then I have a naked point of controls, just some levels that I use by looking at the session volume profile. In short, it gives you the volume within a given day. So this is the volume profile. You can see that most volume was traded over here and lesser volume here and here. So this is basically your point of control. And the point of control of a day, of a given day, is where most volume has traded that day. So what is a naked point of control? A naked point of control is a point of control that wasn't tapped the next day or the days after. If you go to extend point of control, right, you can see that price never came back towards that level. So for example, to previous day, yesterday, we had a point of control here, but the day after, today, we tapped it and we went down. So this one is not extended to your right. This, for example, is a naked point of control, and that's where I place those levels. So it's actually a bit lower over here. I actually use exo charts to give me the right naked point of controls. But basically that's how it works. So to or down to the downside here. Yeah, we have one over here, and we have one naked point of control down there. And even if you go a bit lower, we have one more over here and one more over here. So I do use those levels as well. and they will act as support too. So these were the naked point of controls. Volume profile of the range. So we are currently, let's just say that this is currently the range, the top of the range here, the bottom of the range. What you can do to find your volume profile levels, basically by doing this. Here you have the value area low. I placed my value area high here because there is another reason. I actually start out like this, but then I find some more fixed volume levels by taking some more volume profiles. And then I actually tumbled upon this level, which is a high volume node, a value area high from this move, a value area high from this move as well. So I basically place my value area high over here, and then this has been a high volume node. So you can see that there is a lot of volume that's been traded right here. So this is your high volume node. On this move on up, we see that quite some volume interacted at this region, this support region, and we have that point of control over here, which is basically where the next range could form if it goes back down. SP is a single print. Those single prints you can see on the EXO charts. That's another chart program software that I use for the order flow and the TPO charts. But that's something else. Then you can actually look into the open interest, the shorts, the longs, and different other things. So I have the VP, and then I have the FIPS. Currently, I only took the FIPS from this structure. Right here. And I have the 28 and the 382 a bit lower. So these are all my levels that I have on my chart. And then I look for some confluence on the level. So just let's just start with the main thing that we should be looking for. It's what is the trend doing? So basically, we are still in a downtrend. From here, we made lower high, lower high, lower high, lower high. And now it's another lower high, sorry. So we are still in the downtrend, and for it to actually change in market structure, we should be breaking this level. So this is actually your, let's just say, key lower high. If we can break that level, then we should be looking for a higher low next. So we break that level, higher low, and then we move higher for like an accepted change in market structure. So this can happen as well. But what I'm looking for is to break market structure, make a higher low, then a higher high, and then another higher low. And this is your validation of a new uptrend on a weekly time frame. So basically on a high time frame, we are still in a downtrend, although that we have breached our first higher low, lower high, sorry. And then now we are making our first higher low. So now we should be looking for a new higher low to be made on the chart. So I actually have a couple of elite wave counts too on this chart, on this move. So let's just say that this was 1, 2, 3, 4, 5. So here we have sideways correction, sharp correction, and then 1, 2, 3, 4, 5. I am looking at a couple different things here. The first and main elite wave that I have is that this is A, B, C, 1, 2, A, B, C, 3, 4, A, B, C. The reason that it's A, B, C is because it's in some kind of diagonal over here. It's in some kind of diagonal, but it's not that. Maybe on a log scale, maybe we would have taken it like this, but we did breach this trend line, which is not usually what happens for a diagonal. So I wouldn't really call this as a diagonal for now. But let's just say that this is 1, 2, 3, 4, 5. Then we are looking for A, B, and then C going to the downside. And in here, this could be W, X, Y, X, and then Z. My next one is something different, but actually better. And this is called an expanding diagonal with a 1, 2, 3, 4, 5. Now we have now we have A, B, and this is going to be C. This all being B, and then we have our C wave to the downside, basically at around 1 to 1. So here I have A, B, C, which is still not finished, because if this is A, B, C, then we should finish with 1, 2, 3, 4, 5. Okay? And then I have my edit wave 3, which basically says that this is a W, X, Y, X, Z, and that we've now started a new uptrend that could take out this high. And it also gives me a fourth wave. But one thing that I'm confident in is that we are looking for a higher low here. We are definitely looking for a higher low, in my opinion. Could this be A, B, C? I've been thinking about this as well. But channel-wise, it's a bit weird channel-wise. So what does the rules say of Elite Wave? That if you have an ABC correction like this, then you have two things. P will either do something like this, a little bit higher than your upper trend line, or it will fall short and then move down. To me, this one is too extended to be a C wave, actually. This cannot be a C wave, in my opinion. So it's a higher probability that this is going to be 1, 2, 3, 4, and 5, or at least W, X, Y, X, Z. And then I actually start my count over here as an A, B, C. And the next one, A, B, C over here. So if we take the fibs then, it also aligns with that 2618. And here you can see that it actually tapped that 886 level. So that is definitely something that I'm looking at as well. So knowing this, I do think that the probability of creating a higher low soon, taking out this high, is quite probable. So let's just start with looking at the levels and the most important levels. So now that I have all my levels on the left, I look for some confluence. I know that this will be 1, 2, 3, 4, 5. So now you're looking for a higher low to then take out this a high. And this I call an SFP because it can make a swing failure pattern like this and then come back in. So that's actually a short region for me. That's that I'm looking at. So I don't want all these levels on my chart, so I just look for like the main levels, and that is definitely your yearly equilibrium. Then on a monthly level, I will actually wait for that one. I look at my daily levels here, and I need only one, because that is potentially a support level too. My weekly levels, for now, I don't really need any weekly levels, so monthly time frame. Yeah, previous monthly level. In between, don't really need those as well. Yearly levels. Monthly open. I want the previous month. Previous month equilibrium as well. Previous year, I don't need. Daily levels, I don't need for now. Weekly, I don't need. Monthly, I don't need for now because I'm looking for support. Previous month, that's the one I know. And some naked point of controls. Okay, so that's what we are looking at. Then I zoom in, and price mostly wants to take out like shorts or longs. So people that were long from here, they need to be taken out, in my opinion. Some stops could be taken here and then move away from that level. So it would be nice to actually drop here, take out these stop losses, and then move higher. Tomorrow is CPI as well, so CPI will definitely be a volatile event. So I'm not saying that this will happen, but I am definitely looking at this zone over here as a long. That's something that I am looking at. Count-wise, we have 1, 2, this will be 3, then 4, and then 5. So here as well, you need to look for some confluence. The confluence here is the dot 5 fib. Also look at this dot 28 fib, which is basically acting as resistance right now. So a fourth wave usually goes towards that 382 fib, which actually aligns with my range a little over here. So then I'm counting this as A, B, and then C. Taking the fibs as well from this from the top. And then we have some more levels that we can look at. This daily level aligns with the 1618. And then this structure over here aligns with the 1382, and we still have the 1236 as well, which we are currently at. Basically, in this range, we are now testing this mid-range again. So I'm looking for a rejection back lower, and then to move like that, for example. Just knowing that I would rather long here, taking out these stops, but you never know where it will end. So you have to be patient and look for a trend change. Like on an hourly time frame, a trend change would be, as you can see here, lower high, 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 leading towards the low. So for it to break market structure and to become bullish, we actually need to take out this high, make a higher low, make another higher high, and another higher low. And this is your validation of a trend change. And then you could look for higher actually. Until then, it's actually catching a knife. So until then, you should be looking for lower. And the best way to look at market structure is actually like on a 15-minute chart or a 30-minute chart. For a short-term local market change, if that makes sense. Another count that is possible is, of course, that this is 1, 2, 3, 4, and then 5 lower. But the problem with this is this is sharp, and this is also sharp. So you don't have that alternation, which usually isn't possible. So if you have a correction to the upside like this, and the next one is also like this, then it's rather W, X, Y, X, Z perhaps. So in a corrective kind of structure. Taking the channel here. What I would go for is this ABC move. And this is then 1, this is 2, this is 3, this is 4, and this is 5 somewhere below. And here you have A, B, C. So this is an irregular flat, sideways. Like I said, in second waves, it is actually very common. So most think that a second wave would go all the way around here, but it's actually like saying that the market is very bearish and that it wants to go for another large drop. So you have A, B, C here, and then here you actually have A, B, and then C going up. So this is a sharp move, this is side wave. So that makes sense to me. So the question is this 5 already? Or are we going lower towards our yearly EQ, previous month EQ, mid-range as well? So you have a lot of support here. You have these lows that could be taken. You have yearly EQ. You have previous month EQ, and you have the mid-range on a higher time frame. So for me, this is the level that I'm definitely looking at. But I think like a lot of people are looking at that level. So sometimes you don't really get what you want. So you have to be not passive, but actively looking what could happen. So this could be 5, but you don't blindly long this. I will wait for a break in market structure to happen so I can long this actually. So what would the target be for this move if we have or C wave? Well, then you can actually use the Fips again. Let me make this one yellow. Let's just say that this is the bottom. Let's just, for the example here, let's say that this is the bottom. Basically, our third wave was extended, so I don't expect the fifth wave to be extended, unless indeed in cryptocurrency, you actually sometimes have the third wave extended and the fifth wave extended. I don't expect it, but it's possible. So I will place, all these FIPs that you can see here are potential targets for that fifth wave, starting with the famous .786 FIP over here. So that would be around 28K. So same thing, if you do have your fourth wave, if you have the bottom, then you just look for some confluential levels. And here we instantly have a weekly level here. So let me just close those that we don't need. Yeah. So this is a previous weekly level. Very important level. I do actually know that I want previous year equilibrium, another very important level. And I do want my ranges, because the range is also very important. And I guess that I've lost those. Let's just see. Right there. So your next mid-range is between the .66 and the .786. So that is your next target if you would look at the ranges. So you can basically make a swing trade from this once you have that break in market structure with basically here target 1. Then your weekly as target 2 and previous yearly EQ as target 3. I say TP1 here, but sometimes you have a smaller fifth wave. So I would actually say that this is target 2. This is TP1. So most profit I will take here already. TP3. Let's just say that you want to swing trade and you would like a good trade. You could wait for the market structure to change. Or let's just say that you want to enter already. Then this would be your trade. Let's see. Normally, like theory-wise, it cannot go below the 618. So for this to be 1, 2, 3, 4, 5. For this to be 4, it cannot go below golden pocket. So that would basically be the trade in total, I wouldn't really place my stop loss here. I would actually place it below these wicks over here, something like this, and then take most of profit at these highs. Because what happens sometimes, it takes out the highs, makes a swing failure pattern, and then moves lower again. So that is definitely possible too, because you kind of have one more FIP relationship for a fifth wave, sorry, which is basically the 1-to-1 over here. You can use the log scale as well, and the log scale actually just comes a little bit over that previous high, takes out some stops over here, and then moves down. So yeah, that is definitely my my target 1. And then you look for an SFP, maybe make a short here to then look for lower. If that makes sense. I am personally waiting for a bit lower right here, but if we do have that trend change, because like currently what are we seeing right now? Let's just go on a 30-minute time frame. Let's just see short term what is happening here. I don't really need anything other than my daily levels for this. So I want today's level, which is basically the daily low, daily equilibrium, daily open, daily high. Which is weekly open. So I don't need that daily open. Daily volume profile. So we're basically moving within this range. I'm taking some more profiles to find out what the best level is. That most volume has been traded over here. This is a high volume node. I would probably place my point of control here. And this would be a high volume node. And then this would be a value area low. Yeah, so monthly equilibrium here. So we took out previous low, made a swing failure pattern. Figuring out what could happen here. All right, so on a 15-minute time frame, I'm looking to take out this high because that is the lower high that actually led towards the low. So for a break on market structure, on a lower time frame, we should take out this high. From this, we have previous day value area low, so I expect a turn back on down to then make a higher low, make a higher high towards previous day point of control, golden pocket high volume node, bounce back, make a new higher low, and I will probably long this to look for higher. So currently you're still in a downtrend on a 15-minute time frame as well. You can use the VWAP as resistance. So I wouldn't be too bullish at the moment, but if we do have this structure, then yeah, I will be possibly longing towards. I have some single prints over here. I had a single print around, yeah, something like this over here, 22,350, I guess it was. That would be like my target, or at least take out these highs for another SFP to the downside. But yeah, it's kind of trying to shift in market structure again, making SFP from the low. So SFP is actually, once you make a low, that it takes out previous low and instantly comes back into this region and closes higher. So that's what actually happened over here. Then it came back towards around the previous day value area low. Now it actually did a second SFP from the lows. So then I would like to look at order flow too, because what happens here, it's actually some longs that are trapped. So what happens, some people are longing here, then it takes out previous low, and longs are stopped out and instantly bought up. So we have that twice. So I should look at XO charts now and see if how many longs that were trapped and what the volume is. But this could have been like your first long and then a second long right now, back towards point of control. So that's very technical on the scalp side. But let's just place an alert here. And yeah, I would be looking for taking out higher low, higher high, higher low, and then here I would long. Looking for this high, a sweep of this high. Okay, so that's for Bitcoin. Basically, summary of Bitcoin. I am looking for the bottom. My main target would be, let's say, 20,240, taking out these stop losses. That's where the liquidity is. That would be like the best case scenario for me, because I want to long here. That's yearly equilibrium. If in case we do have a market structure change here on a lower time frame, I would like to long as well. Basically looking for the top, something like that. But it's too early to actually enter a long position. We are still in a downtrend. I would like to look at USDT too. Oh, so for Bybit, well, actually, I use a couple of charts. I use this one for basically my normal charting for the day and for the week. So I have all my levels in here. I use this one. That's BTC USDT perpetuals for Elite Wave. So yeah, that was another Elliott wave count that I have, A, B, 1, 2, 3, 4, 5 lower. So I use BTC perpetuals for my Elliott wave. Then I have BTC USDT on Binance that I use for my ranges actually. So as you can see here, on the weekly time frame, I have all my ranges. Bottom range, the top of the range, which is basically, like I said, bottom range, top of the range on the yearly time frame. So we basically tapped into that monthly mid-range, and then now we are hovering between the mid-range of this channel here. And then we can still come back towards that weekly mid-range, which is basically around these levels, which I really like price to go. And then I still have USDT perpetual contract on Bybit, and this is actually the chart that I trade. So I would like, when I enter a trade, to know where to place my stop loss, because if I would long here, I would place my stop loss, let's just say over here. It is different on the USDT pair compared to the BTC USDT pair. You can see it's 640, 660, and sometimes it's like a big difference. So I try to use the USDT pair just for the normal trading, for normal charting, and then to look for my stop loss, I look for the BTC USDT Bybit chart. So yeah, Bybit is a very good exchange, and yeah, you also have a huge gap on the CME. Let's see. Yeah, here. Yeah. So this gap might actually fill as well. And if we compare it with my target, so my actual buy target would be here, and the gap is basically at 20K. Yeah, so that, like I said, that would be like best case scenario. Taking out these stop losses, bouncing from your CME gap, and then moving higher. But I think everyone is looking at this. Everyone is looking at this gap. I think I'm not sure that it actually will close already. I think like something like this, and then that would make more sense.